Hello everyone and welcome to another market update. Today, January 28th, the market took a big hit today, and everybody was surprised. Apple came yesterday with big earnings, very very nice earnings, and everybody thought that that's it. This is going to change the market sentiment, and didn't change the market sentiment. The market actually moved today more than it moved in any of the last 2 days that it was going down. Um, Everybody is surprised why the market went down. Like, the market is going to go up because Apple made a good earnings. Like, the whole stock market is gonna just be led by Apple. That is just crazy. Plus, if you looked at Apple earnings, I didn't read the script or anything of the earning, but from the major stuff that I read, all the profit came from the iPhone sales. That's it. They were expecting, I think, 40 something, and they sold, or 70 something. They sold more. I don't care about the number, but they sold a ridiculous amount of iPhone 6, and they sold it for a better price than was originally, they thought they would sell it for. So the margin was huge on iPhones, and it helped a lot. But if you look at the iPad sales, if you look at the computer sales, they were less than estimate. So people just wanted to upgrade to iPhone 6. It's not like, people are upgrading to, or more people are getting smartphone or something like this, because Microsoft and other phone makers, they did not say anything good about, their earnings. So Apple is more and more becoming just an iPhone company, and I think this trend is going to continue, which is fine as long as they are making money. I don't care what they are making. But Apple is not going to move the market higher. The market moved higher in the morning and then just kept going down. Did not help that the FMOC meeting came and said same thing. We are patient, and oh, big breaking news. The Fed is still patient. Yeah, like, how is this big or breaking news? They have been considerable for like 5 years now, and then they like found out that considerable is ridiculous because people are confused what considerable means, so they change it into patient, and they put in the last statement that patient is the same as considerable, and now everybody is just surprised. It just does not make sense to me why people are surprised. I think it's just the financial media just want something to talk about. But the weird thing in the FOMC meeting minutes, that they like talked up the economy big time. The economy is strong and inflation is going to be low. I want to know what those people smoking. I want to have some of it. Crazy, And I think the market is start realizing that those people are just talking up the economy for no sense. The last few months, the economy, all the data was not horrible, but they are not strong either, and all the underlying numbers of the jobs are bad. So I don't know why people are surprised, but the market wanted to move down. Yesterday they moved down because of Caterpillar. Today they moved down because of the FOMC meeting. Tomorrow they might, once they reach this band of support we were talking about here, it might move higher, and people are going to say it moved higher for some. They have to find a reason to say why the market is moving. I know I sound like a broken record for the past maybe couple since I started this video series. I'm talking about this range. It's as simple as this. You can fight it, you can think of it any other way, but it's just it's a range. The top range is 2064. The bottom range is 1988, and it's gonna be in that range till we clear it one way or another. We just have to trade the market we have. people again got spoiled from the 2013 and 2014. It just the market was going straight up, so they were hoping 2015 is going to be the same, and it does not look is going to be the same as 2014. Even I was saying a few days ago that the 2014 started the same way, and but now it is not. Like, you know, it was a little bit in January and then took off from there, but this time it is different. And the more we keep testing this support, the more likely we are going to be going lower and break it. We have to wait and see. You know, when I started trading, I did not like this wait and see. I wanted to buy this stock, I want to buy that stock, and I want to sell here, and I want to buy here. You know, and then I learned the hard way that no, you know, you have to watch the general market, what the general market is going to do. Because sometimes, you know, if the general market is weak, your stock picks are not going to be doing that great and might move against your expectation. You have to be patient, and just wait for it, wait for it, and wait for it. You know, most of the time in a market like this, you're going to be doing nothing. But aren't supposed traders do something and make money? Sometimes not making money is better than losing money. And if you are in cash, the dollar is moving up, so you are making money. Look at it this way. This is what I learned. You know, I did every single mistake in the book when it comes to trading. If there's a list of mistakes that the traders do at their lifetime, I did them all. Trading stocks and trading options, and you learn the hard way when you lose money and you just don't know why you're losing money. You start learning not to find the trend, not to fight the trend, and just trade the market you have. Sometimes you are very active, sometimes you're just a sloth, you know, hugging a tree and just watching what's going on. Keep a list of stocks that you are looking at. And do not chase stocks right and left. We're going to talk about some stocks that we were looking at, and they might be doing something in the future. We will see. For now, it's still a trading range, and we just wait. Nasdaq again open up big time because of not big time actually. It's not that much, and because of Apple again, and moved lower all day, closed at the lower end of the day, in a, like, you know, in a good volume set. That's not a good sign. Oil, it looks like oil, you know, is want to move lower. So this is another thing we look for. Again, oil moving lower is good. I wish oil stays at 40 forever. You know, that's a good thing. That good thing for the economy, good thing for everybody. But you know, companies will get hurt from from low oil. They will adjust. You know, people with low cost production will stay in the business, and people with high cost production will get out the business. Then more oil will go higher again, or maybe the US dollar is going to start moving lower, and then oil will move higher again. But as of now, oil looks suspicious. It looks like it wanna go lower. How low can we go? I do not know. We have to wait and see. Financial again did horrible today. And my XLF puts actually did very well today, and I'm still holding the puts, and my target is here somewhere around to, you know, not straight to 2250 at the lower band. Here is gonna find some support, move higher, and then move lower. This is what a stock that's moving lower does. Keep going up and down, but generally in a down direction. The volume was a big volume today. Financials are doing horrible. Gold, of course, every time the Federal Reserve come and talk up the economy, gold move lower. Surprisingly, it didn't move that much lower. We said before, 1300 is a very important level, and there are going to be a lot of volatility around it, but it's still holding the lower here. What's this low? It's holding the lower here. I think this is around 1280. It's holding the low here of 1269. This is, this is a very important support right now. I think if gold break this support, it is going to 1250 very quickly. So it's very important for gold to hold this 1270 level. This could be here, just a flag formation, and then it's gonna move higher from here. We do not, but this is like, so many candles for just being a flag formation. But when you are bullish in gold, you can look at the chart and find something bullish about it. If you are bearish in gold, you're gonna look at the chart and find something bearish about it. I have to admit I'm a little bit biased toward gold and silver. I'm trying to take my emotions out of the way. But again, if this is not a gold chart, I would just wait and see for gold to break this resistance here and move higher. If it did, we said if it did break this, then it is going to move lower. It's as simple as that. We have to wait. A lot of waiting. I know waiting is not fun, but what can we do? Again, silver, we spoke about it yesterday, and we said 1750 is the line in the sand right here, and it has to clear the 200-day moving average of 1843 or 1850 and move above it to get really bullish on silver. But both of them look like they want to move higher. GDX, that's the importance. If you go back to the videos, and we said I have to see GDX move above the 200-day moving average. Okay, I'm doing buy. No, wait to confirm that. If you have bought yesterday or the day before, now you are on loss. You have to wait for confirmation. Waiting is not fun, but you have to wait for confirmation. Not all the way to 26 or 27, just few days, so we can tell that this was good support. It wasn't good support, but it's still a higher low as of today. It might move lower again tomorrow, but we have to wait and see. This support level is very important. If it broke below 2113, look down below for GDX. As long as gold is going to move higher, it will. GDX is going to move higher with it. I think in the next few weeks this will be resolved. Apple. I apologize yesterday. I was even doing the video, and your earnings were out, and I didn't even realize that the earnings were out. Usually when I am involved in stock, I have to know the earning, because as a trade for me, I do not hold a stock over earnings. It just not worth it to hold it over earnings. You buy it and then you're like itchy waiting for the earnings. And the earning could be good as you expect, but people have higher expectation and the market move lower, or the stock move lower. And sometimes, you think the earnings are going to be horrible, and you short the stock, and then boom, it's just better than expected. It's still not that horrible, and then it moves higher. So it just, as a trade, you should not trade earnings. That should not be something you do all the time. I should word it this way. If you're gonna buy just a stock for the earning, that should be something very, very, very small in your account. That should not be like 10% or 20% of your account. That's my opinion, is dedicated to trading earnings. It just doesn't work. You're gonna get burned. That's not called burning. That's not called trading. That's called gambling. You go to the casino, you go to the roulette, and you bet on red, and you wait to see if it's going to come red or not, and then you double your money or you lose your money, which is fine, but just know that it is gambling. It is not trading. And especially in stocks like Apple or Google or something like this. Why? That's $115 stock, right? If it wasn't for the split, it would be $1,000 now stock. So I guarantee you that most people that trade Apple for earnings, they buy call option or put option. I hope that they buy put or calls and not sell it, because if you sell it, then you just, you know, for me that's just madness to sell open an option on stock that's for earning. But anyway, before the earning, and that's something, you know, a lot of people who trade options know about it. Before earnings, there is a lot of volatility in the option itself, built in the premium. So why? Because, you know, not everybody think Apple is going to move after earning. If you think that, then it's not true. It's, you know, a lot of people bet that it will move lower, and especially those people who consider themselves a contrarian or whatever, and they think it's going to move lower. When you buy a call option, somebody sold it to you, and the person who sold it to you sold it because they think they're going to move lower. However, long story short, there is a volatility built in, because some people are buying calls, some people are buying puts, so there is volatility, so it's increasing the premium of the option. Once the news is out and the stock moved in either direction, the volatility just disappears, because everybody is buying in the same direction that the stock is moving. So as of today, for example, Apple moved higher, then everybody's buying calls because they think Apple is suddenly going to move to $200 or something. I don't know why you buy an option after the earning. Whatever your reason is, then a lot of people are doing the same thing. Then nobody in the other side of the trade and the volatility get crushed. So even with the big move in the stock, you know, the option might not move as much as you think it will move, or as it should move if there was not that earning news. So it is dangerous. That's my point. It is dangerous to buy an option just based on the earning. I know Fast Money, and I don't know if this show is still on the CNBC, option call or option trading, something like this. It used to be on Fridays, I think, or Thursdays. They used to recommend all this stuff all the time, and those, you know, this is their job, this is what they do, and if you are good at it, well and good. But if you are not, I prefer, you know, just paper trade it first and see if you are good at it or not, and if you're not, just don't do it. So if I knew that Apple was actually releasing earning yesterday, would I have said, oh, we should buy this stock here, or I'm gonna buy this stock, or I would have bought Apple? Absolutely not, because look at still what happened. Yeah, it gapped higher very well, and then what? It went down. So if you are not in front of the screen while this is happening, and usually I am not, you know, I have other things to do, you lost a lot of profit. And why would I buy here? Just tell me, why would I buy here? You know, I don't trade earning, and I'm sorry that I didn't mention that the earning was out yesterday. For now, you know, it's a big volume. Should I buy Apple now? Still no. You know, where is my support? Is it today's low? I don't know. It closed right at the low of the day. What if the market didn't close at 4 and closed, they say, today we're going to close at 5? Would you guarantee me that Apple weren't about to move lower? I do not know. So I do not know where my support is. I need more information. I need one more candle here that is white, you know, to tell me that this is, you know, okay, that could be support. Then I can buy Apple here and say this is my stop loss. But like this, I still stay away from Apple. Facebook, also another stock that came out with earning, and people are like crazy about Facebook. Everybody wants to buy Facebook. This is a weekly chart of Facebook. The stock, like, literally did nothing since March of last year. Nothing. Just moving sideways. So either you're holding it for the long term, or trade in it, it didn't do anything. Now, so I'm sorry. So let's not hold it for the long term. Let's just trade it now. Okay, let's look at the daily chart of Facebook. There is no trend. There is no trend. All what I can see here is there is a band of resistance around 81, 82, and band of support around 73, 74. That's all what it is. But the stock, lately have been moving bad from the beginning or from the late of December. That's a very bad move. And today they came up with a very good earning actually, and still the stock moved lower. So I don't know. Maybe this is not the time to buy Facebook yet. If you love to buy this stock. I never traded Facebook, and I don't think I will ever do until it starts trending. It's not trending for me. Skyworks, I zoomed in a little bit, and I sold some call option against my position. So now, what is it telling me? It's higher highs. Sorry, higher lows, higher lows, higher lows, higher lows. Just keep going higher lows. I know today was down, but the whole market was down today. That's why I was, selling options against my position and just wait one more day. If it kept going down, then I'm out of Skyworks. Another stock we spoke about, APC, and now I know I'm trying to remind myself that's a very close earning. So I either if I decided to buy between now and February 2nd, or I have to wait till the earnings come, but it moves lower. That's why it's very important to wait for confirmation. 1-2 days, above, the band of resistance when it broke, it was not enough for me, and I had to wait. This could be, just, 1 day lower and then take off from here. I do not know, but as of now, I am not gonna buy this stock yet. The same is for Mosaic. It moved higher. We were waiting for this here to prove as support. When it moves higher, this is what I do. When it moves higher, okay, that's good. It moves 1, 2, 3 day higher. That's, it went too far. Now I have to wait. Now, this movement is good. It's not that I missed this movement. I meant to miss it because I want to wait to see that the stock is moving higher. Because make no mistake, this is a stock and downtrend, or at least moving sideways. So I wanted to see that it's moving higher. Then it went low and stopped right here. That's very good. Should I buy? I buy while it's going higher, not while it's going lower. Not because it moves lower now I say, oh yeah, it's an opportunity to move at a lower price. No, it's not, because this can continue going higher. So we just need more information. Again, this market is the easy money was done in 2014. 2015 is not fun. It's not as easy. I think trading still, it's a fun thing to do. It's very interesting. But the easy money, just buy any stock and it's going to move higher thanks to the $45 billion a month that the market was receiving each month from the Federal Reserve, doesn't exist anymore. So we're gonna see some turmoil, and we're just gonna get through it. The market is gonna trend again, and we're gonna find stuff to buy or sell very soon. We just need to be patient. I hope this helps. Thank you so much for listening. Have a good evening.